Okay, good day. Here is GYC's first quarter 2024 perspectives. These perspectives are basically key takeaways that we see happening around the world now that could have possible impacts to your investments over the next few months. So first up, this is a recession probability indicator. Basically, the model at the bottom, shown in the orange line, aggregates all the economic inputs and data that is available and reported, and gives us an idea of the trend of the economy, whether it's trending weaker or trending upwards strongly. And so at this point in time, you can see that the economy is not really at the high or strong growth segment at this point in time, but neither is it hovering into the recession areas. So this is a positive development, something that has changed from 2022, because what we are worried about is that once the economy goes into the moderate recession or strong recession levels, the likelihood of a larger sell-off in the stock market is there. But at this point in time, you can see the economy is recovering well from 2022 into this year, and it's likely to continue into next year, or this year rather. So it's as unlikely that the market will suffer a very big drawdown at this point in time. Next up, something that we do measure very frequently is global and financial stress. Why that is important is that usually when financial stress is high, above a certain level, then the likelihood of the market suffering a little bit more volatility, a little bit more turbulence, and the chance of a high sell-off is there. But you can see now, presently, the market is actually at a very low stress level. Stress is actually very benign. So it's likely that markets will continue smooth sailing on an upward path. Something that's been talked about quite recently is geopolitics. As we all know, there's a new war that's happening in the Middle East between Israel and Hamas. And of course, the Russia-Ukraine war is still ongoing. And so you can see from this long-term chart, there are many events, geopolitics and crisis that have been overlaid onto the stock market line. And for the most part, if you notice that these events usually do not have much of an impact on asset prices unless they happen during a recessionary period, which is shown by the grey shaded areas. So the key takeaway here is that recessions are a little bit more important as to how asset prices react, and they are usually much less affected by events that happen outside of it. Finally, what we've seen over the last few months is that the market rally continues to trend upwards strongly. So now we can see that the strength and the uptrend is intact for the stock market. Basically, momentum is strong, and usually when momentum is strong, it's likely to continue over the next few months. Right, so this chart here basically just shows very simply, the price of stocks represented by the All Country World Index versus its various moving averages, which are just basically simple momentum indicators. And currently, everything is positive. They're trending upwards. And so we expect that at least over the next few months, markets will continue to return or give at least positive returns. So as a summary, these are the main points that we cover. Currently, recession probability is low. Financial system stress is also low. Geopolitics and other crisis events that occur outside of a recessionary period do not have lasting impact. And the stock market uptrend is intact and is actually very strong. So over the next few months, the expectation is that the market rally should carry on, and there's no need to be too concerned of any large drawdown that could happen. Thank you for watching. I hope that you found these perspectives useful for you.